In a world of flickering screens and digital empires, where tech companies are the undisputed kings of the financial world, there exists a silent, hulking giant that defies all logic. This is a company that makes more revenue than Microsoft, Meta, and Nvidia combined. It is a store you can find in every small town and sprawling suburb across the United States. You know it as a place of low crowds and screaming children. You know it as Walmart. Yet, in a bizarre and sudden twist of fate, this retail behemoth, school purveyor of groceries and household goods, is now priced like a tech company. Its stock has conquered, reaching a near $1 trillion valuation with a price-to-earnings ratio that rivals the very kings of Silicon Valley. How did a store you visit for a gallon of milk suddenly become an engine of explosive growth? And is this incredible new reality a sustainable miracle or a dangerous illusion waiting to come crashing down? For most of its history, Walmart was the textbook definition of a boring, defensive stock. From the year 2000 to about 2017, its share price was largely flat, a gentle horizon line in a financial landscape of soaring peaks. It was the sleeping giant, a colossal business in an old industry, with minimal growth but a rock-solid foundation. In a world where the buzz was all about e-commerce, it was easy to dismiss Walmart's brick-and-mortar model as outdated and on its last legs. After all, why would anyone bother with crowded stores when they could get everything delivered directly to their door? The convenience of online shopping felt unbeatable, and the stories of retail chains like Sears and Toys R Us dying were a stark reminder of the new digital age. The conventional wisdom was clear: Walmart might not die, but it certainly wasn't going to grow. And yet, here we are, not in the post-retail e-commerce that so many analysts predicted. The truth is far stranger. A full 76% of all retail sales still happen in physical stores. We've all collectively realized of digital retail. There's a tangible value in going out, seeing a product, and even just the experience of shopping itself. And for Walmart, with its vast network of over 700 stores across 19 countries, more than 10 times the number of Costco, this physical presence became an unexpected superpower. From 2018 to 2023, Walmart's share price saw a solid but not spectacular 30% jump. This showed that the giant was awake and on solid footing. But then, at the end of 2023, something happened that no one saw coming. The stock price exploded, nearly doubling in a single year. An explosive came for a company where the tin game was considered a massive victory. This is where the mystery deepens. The company's revenue growth was nothing special, but its valuation metrics went through the roof. With a price-to-earnings ratio of 41, investors were suddenly pricing Walmart like it was a tech startup, not a grocery store. This number was on par with Nvidia's and more than double Google's, something that had nothing to do with selling more groceries. Walmart, the king of low-margin retail, had realized that the real money wasn't in selling things, it was in selling access. They realized that their cost enough wasn't a liability, it was an asset, and they began to think and execute like a tech company. They had a goldmine of data, and they were about to start selling it. But as we peel back the layers of this financial revolution, we find something far more unsettling. The price of this isn't paid in dollars. It's paid in a currency far more valuable: your privacy. The horror isn't that Walmart became a tech company, it's how they did it and what they now know about you. The company you trust to sell you everyday items has become a relentless, all-seeing data collector, turning your shopping habits into their most profitable product. The true transformation began with two key moves. The first was the launch of Walmart's subscription service that offered unlimited deliveries, fuel savings, and even travel discounts. This wasn't just a convenience. It was a way to generate regular, consistent cash flow with much better margins than their retail business. The second and far more significant move was the quiet launch of Walmart Connect, their advertising service. This is where Walmart looked at the tech giants and saw the writing on the wall. For every dollar Amazon makes even more in profit from its high-margin advertising business. The same is true for Google, where advertising is the bedrock of their empire. Walmart realized that with its vast network of physical and digital substance, just as valuable a mountain of shopping data. They knew what you buy, when you buy it, how often. This was the dream for advertisers. Walmart Connect left this layer to an unprecedented degree. Walmart app and its proprietary payment system, Walmart Pay, you are not just making a transaction, you're providing a direct feed of your shopping habits. In a moment of pure, almost cinematic horror, you also learn about the beacons that Walmart has installed in its stores. These are small devices that you took to detect your smartphone's location. This means that as you walk through the store, Walmart knows exactly what aisle you're in, what products you're looking at, and can even send you a tailored promotion for a brand of chips you often buy. The physical store, once a refuge from the digital world, is now just another part of the data-driven ecosystem. The horror isn't just that Walmart is collecting this data, it's the sheer scale and invasive nature of it. They have turned every one of their thousands of stores into a sensor, and you are the data point. This data-driven advertising business, even though it accounts for less than 1% of Walmart's total revenue, is what investors are betting is at around 50%, and it's growing at an explosive rate. This explains the stock price's sudden surge, but it also leads us to the dangerous aspects of this new Walmart. The valuation is based almost entirely on future potential, not present reality. Analysts are already starting that the company might be a bubble waiting to burst. The price earnings ratio of over 40 is a bet that this small, high-margin business will some kind of Walmart's overall portfolio. But how can an advertising business, no matter how profitable, overcome the sheer scale of a retail business with razor-thin 4% margins? Walmart is now in a truly odd and perilous position. In its efforts to become a tech company, it may have alienated its original customer base. Its push for higher-income shopper time poor led to a new brand refresh and a focus on convenience. But these new wealthier shoppers aren't necessarily loyal. They were drawn in by pandemic-era savings and might leave as easily as they arrived. At the same time, price-conscious customers who the track of Walmart's empire may be feeling alienated by the brand shift and the creeping increase in prices. The company's new strategy is a high-risk, high-reward gamble, and the stakes are massive. It is a story of a business that went from being boringly safe to being terrifying, because all in the blink of an eye. The story of Walmart is a microcosm of our modern economy. It's a tale of how a physical and antique found its way into the digital future, not by beating the tech giants, but by joining them. The mystery isn't that a massive you're throwing away to grow. It's that it chose to grow in a way that fundamentally changes its relationship with its customers, turning them from shoppers into data points. And the final question we are left with is, can a company with the soul of a department store and the valuation of a tech giant truly survive? Or is its new success just a spectacular mirage? This is just one of the many mysteries we unravel here at Oddworld Files. We believe in looking beyond the headlines and breaking down complex topics into simple, logical explanations that reveal the hidden truths of our world. If you've been intrigued by this journey into the unexpected world of finance and technology, and you're new here, please hit the subscribe button and the notification bell so you never miss another deep dive into the extraordinary and logical workings of our world.